Hi, I'm Bruce Roth, and my guest today is Dave Horwoodell, the founder of Torchlight Tax, and he's also an enrolled agent. And Dave, the question I wanted to ask you today is, you've talked in other videos about having someone who's a well-prepared professional can save you maybe thousands of dollars in taxes or penalties or interest or whatever. Can you give me a couple of examples of that?
Yes, I had one gentleman. He had gotten divorced and moved from Clearwater, Florida, to Las Vegas, Nevada, and he'd been in real estate when the real estate market crashed, and he lost literally everything. He had no assets left. And the final thing was, he had a house that was foreclosed on in Clearwater, Florida, and the bank, when they foreclosed on the house, they forgave a $90,000 debt. And his ex-wife took that in and took it to a big CPA firm, and they looked it over and they said, well, $90,000 debt, oh, that's a $30,000 tax. And they put into the Internal Revenue Service that this couple owns $30,000 because they had a forgiven debt as part of the short sale of their house. But in actual fact, if they had asked the question, are there any circumstances in which a forgiven debt is not income, they would have discovered that under bankruptcy, insolvency, or with your personal home, that it doesn't count as income.
And this property was all three of those?
No, it was insolvent. It had been their personal home, but it was arguable because they'd been out of it for many years.
Okay.
Because
it's over two, it's not personal anymore.
But the insolvency point, they were definitely insolvent, and I'm going to have to, he's going to have to file an amended tax return, but he's going to get his $30,000 back. But had he known and asked that question, the billing never would have occurred.
Okay. Any other examples that
Yes.
you bear mentioning? Yeah,
this is another example of a guy who came in, and he had already filed his taxes, and he paid, in addition, he was a high-end electrician, been in the union for 30 years, way up on the electrician, command channel, big dude, right? Making hundreds of thousands of dollars. And I asked him, looking over his taxes, well, you work in Las Vegas, why are you paying taxes to California? And he says, well, that's where my firm is. How long have you been in Las Vegas? He goes, a year and a quarter, year and a half, something like that. I think, great. Well, you know what? You don't owe those taxes. If you're in Las Vegas, you're working in Las Vegas, you live here. California, by California law, they only tax working men's income when they're actually working in California. So had he known that, he would have been able to save that $11,000, which, we did do an amended return, you will get the $11,000 back. But the question would be, well, if you work and live in one state and you're paid from another, the company in another state, well, who owes the taxes? What state do you pay taxes to? If you'd asked that question, would have been a little bit easier for him. It would have saved that $11,000 immediately rather than having to wait to get it back. Luckily, he came and saw me on a different issue, and I spotted that.
Great. Those are two great examples.
Cool.
Thank you so much, Dave. And thank you.